All right, let's dive right into this explainer. Today, we're unpacking McCormick Company's Q1 2026 business update. Now, whether you're an investor, a market analyst, or honestly just someone curious about the economics of the food we literally eat every day, McCormick is an absolutely fascinating bellwether. We're going to look closely at how this undisputed flavor giant is navigating what is, frankly, an incredibly complex economic climate right now.
And really, this question sets the stage for our entire analysis today. How does a global flavor giant actually thrive when consumers are feeling the pinch? We're exploring this intense tug-of-war between rising global costs and that universal everyday desire for flavor. I mean, when grocery bills climb, what stays in the cart and what gets left on the shelf? The answer to that is exactly what drives McCormick's whole strategy.
So here's our roadmap. 1. The Q1 financial snapshot. 2. Consumer versus flavor solutions. 3. The resilient everyday consumer. 4. Managing geopolitical supply chains. And finally, looking ahead to 2026. Let's get right into it. Starting off with Section 1, the Q1 financial snapshot, and what the numbers actually say. Okay, so the absolutely crucial point here is that McCormick delivered a really strong 13.6% constant currency sales growth in the first quarter. To put that into perspective, in a macro environment where a lot of consumer packaged goods companies are just struggling to eke out single-digit growth, 13.6% is massive. It's a highly notable figure that really demands a closer look. They are, for sure, spicing up the numbers in a pretty tough market.
But if we break down where that growth actually came from, it reveals it wasn't just, organic magic. A massive 12.4% came directly from mergers and acquisitions. We're talking about some really smart integrations that we'll touch on in a bit. They also gained 1.9% from price increases, and the big takeaway for us here is that these gains successfully offset what was just a super tiny 0.4% dip in overall volume.
Now, underlying all of those broader macroeconomic moves, their organic sales growth stood at a solid 1%. As CEO Brendan Foley pointed out, this organic growth was driven mostly by their pricing strategies, while the actual sales volume stayed completely in line with their internal plans. Basically, they anticipated a certain level of pushback when raising prices, and the data shows they hit the nail on the head. Their predictions were remarkably accurate.
Moving right along to Section 2, Consumer versus Flavor Solutions. This is really a tale of two segments.
Looking at the consumer segment, it's honestly a bit of a balancing act. On the success side, just look at U.S. hot sauce. That is 6 consecutive quarters of strong performance. Brand loyalty in hot sauce is incredibly spicy and, well, sticky. They're also seeing a gradual recovery in China and robust results from integrating McCormick to Mexico. But, it's not all smooth sailing. They are facing real pressures in the Americas with recipe mixes, specifically Mexican flavors, and U.S. mustard is taking a hit from some heavy promotional rivalries. So highly loyal specialty items are definitely winning out, while heavily contested staple condiments, yeah, they're feeling the squeeze.
Over on the flavor solutions side, so think the B2B side of the house, the international dining recovery is really helping cushion the blow. We're seeing improved volumes in branded food service, really strong quick service restaurant performance over in China, and a stabilizing market in Europe, the Middle East, and Africa. That said, they aren't totally immune to domestic pressures. They've noted some volume softness with consumer packaged goods and restaurant customers right here in the Americas.
Which brings us to Section 3, the resilient everyday consumer and shifting kitchen habits.
This is where it gets really interesting, because consumers are actively changing how they eat. To dodge those rising dining out costs, people are turning back to good old at-home scratch cooking. But here is the absolute key takeaway. While we're cutting costs by staying in, flavor remains a total constant. People simply aren't willing to compromise on taste. And that's driving continued momentum in protein and better-for-you platforms, where, let's face it, spices and seasonings are completely non-negotiable.
This macro strain is systematically changing retail strategies, too. Financial strain and affordability? They're broad-based, and they are persistent hurdles. But the everyday consumer is adapting fast. E-commerce is driving massive digital acceleration, fundamentally changing how we all shop for groceries. Plus, McCormick notes that AI is actively reshaping product visibility, pricing strategies, and brand relevance. The whole way a consumer discovers a recipe and then buys the spices for it is shifting right before our eyes.
Section 4, Managing Geopolitical Supply Chains, Navigating the Global Storm.
If the consumer is the hero of McCormick's story, global supply chain pressure is definitely the villain. The geopolitical storm we're seeing out there is causing severe cost volatility. We're also looking at potential softness in the EMEA, food away from home sector. So why does this matter to McCormick's stability? Well, because they're actively managing this exposure. Because they have diversified sourcing and regional footprints, if one region's supply chain breaks down, the whole operation doesn't just derail. They're mitigating these massive external pressures through some serious internal productivity improvements and highly disciplined pricing models.
And CEO Brendan Foley pretty much sums up this defensive playbook perfectly. He says, profitability reflects acquisition accretion and inflation mitigation strategies. Now, in plain English, he's directly acknowledging that relying purely on volume growth just isn't enough right now. Acquiring smart assets and actively fighting inflation head-on is exactly what's protecting their bottom line. It's a bitter pill for competitors, maybe, but a total sweet spot for McCormick's margins.
Finally, Section 5. Looking ahead to 2026. Maintaining the outlook. After digesting all that strong Q1 data, the shifting consumer habits, and those complex global pressures, what does the rest of the year actually look like for this flavor giant? Well, the verdict is stability. Despite the complex economic weather and that constant push and pull between pricing and volume, McCormick confidently states they remain entirely on track to meet their financial targets for the rest of 2026. The strategies we've talked about today, from strategic M&A to defending margins through disciplined pricing, they're working exactly as intended.
As we wrap up this explainer, I want to leave you with this final, kind of provocative thought. We've seen that people will cook at home to save a few bucks, and they'll buy the good spices to make those home-cooked meals actually taste like a restaurant. But how long can everyday cooks bear the brunt of broad-based inflation before they have to compromise even on flavor? That tension right there is exactly what we're going to be watching in the quarters to come. Thanks so much for joining me on this deep dive, and keep your eyes on how these global trends continue to shape what's sitting right there in your pantry.